Good morning, Paul Georgie from Allendale. It's December 18th, Wednesday morning, and trade is quiet here this morning ahead of the Federal Reserve minutes that should be released this afternoon at 1 o'clock. The surveys done by Newswires have suggest that 40% of the people think that we will have some type of tapering on the QE3. So that's got the trade a bit nervous, and traders are backing off evening positions ahead of this report. And also many are already in the holiday mode, so they have reduced positions going into the end of the year. As we look at the wheat market, it leads the weakness here in the complex today. Ample supplies of global wheat has put some pressure here on U.S. markets. The last few tenders by Egypt and other countries have all gone to either the EU or to Russia and the Black Sea region, which is keeping some pressure on the U.S. futures markets here. There's also this continued liquidation of the spread where up until a few weeks ago, we were long wheat, short corn. The trade now has turned that around and getting out of that spread, and I think that's putting some pressure on the wheat market here as we go into the holiday time period. Soybeans, they continue to waffle back and forth as they find resistance at the 1350 area in the January contract. There has been some report of a grain move at the 13.5 area yesterday. Most of that grain, however, was in the delayed pricing contracts. So there wasn't any new shipments of grain. It was just farmers cleaning up the books and making some sales, is what we've seen and been reported here by grain merchandisers. The corn market's kind of caught in the middle. It's trading near the support area. There's good technical support in March corn at 418.5, and some of the other things that it's battling is China still has not solved the GMO issue and continuing to test and cancel corn and reject corn that's coming into their ports. The report over the night is that 30% of the corn that has gone into China for import from the U.S. has been rejected. We've got potential ending stocks increases on the January report. Trade, I think, believes that we'll see bigger yields and possibly larger ending stocks there. We also have on the supportive side, we've got lack of farmer selling. Even on the bit of strength we've seen yesterday, there hasn't been any increase in movement. We expect that movement not to occur, or sales not to occur, until after the first of the year. And another supportive factor is the seasonal traders are looking at historicals and saying, well, corn rallies most of the time between Christmas and New Year's. That is providing a bit of support to the corn complex right now. But I think in general, when you look at the overall grain complex, they're in holiday mode. It's a light trade. It's going to be very choppy and very volatile at times. We do have Secretary of Agriculture Vilsack going to China, meeting with his counterpart there on Friday. That meeting has been set up for a long period of time. They do that on a yearly basis. And however, you've got to believe that they're going to be discussing this GMO issue and hopefully get something worked out there. In the livestock futures, they continue to be affected by this back-to-back holiday that we've got for the next 2 weeks. It's going to slow down need for cattle and hogs, and that's got the packers willing to wait and pay less for the fed cattle and for the hogs that we've seen slide here in the last few days. Futures markets are trying to work through this, knowing that once we get through these next 2 weeks where we've got holidays, lack of demand at the retail counter, that we should see some improvement when they get back to normal work weeks. We should see the demand pick up and also meat demand pick up. So tight supplies ahead for this first quarter of 2014 for both cattle and hogs could put some underlying support in this market. However, fund liquidation throughout the session is causing volatility, and it's a very choppy market to be trading in. Use risk management well, and we suggest contacting Allendale. We can help you work out some strategies if you want to participate in the market here over the next couple weeks. Cutout values were lower yesterday in pork, down 11 cents. Choice beef was down 154. Select was up 39 cents. So look for continued volatility and continued choppiness here in these markets as we go forward, and stay in touch with Allendale's research. If you weren't able to get the Allendale the monthly Ag Leaders Conference or webinar last night, you can go to our website and log on and get that because it was recorded. You can listen in and see what Rich Nelson and the guys here at Allendale had to say last evening. So we wish everybody a very successful trading day. We'll talk to you tomorrow morning.